So anyways, here's the level I was telling you about, 1550. There's a neckline here. It's kind of upward sloping, and if you keep moving down from here, I mean, there's a high probability you're gonna get 1550, and you'll get a double top. You can see the outline here, this double top, and you'll hit that, and there's a chance you'll get a bounce, and then I don't want to get too granular on you guys, but 1550 is the level we're looking at. If you do a measured move basis, it's kind of scary. You could actually go from 1550 to 1400 if you measure it from the top of this peak here to that neckline. That break will put you down here, which is actually corresponds to there's a monthly floors and ceilings level at 14. And your long-term cyclical trend that started in 09, it'll meet up right up with that. So it'll be kind of like clockwork if that does happen. So the numbers make sense. It's going to correspond to a long-term trend on a measured move basis. So 1550 to 1560 really is the level. Through there, it's 1400 is kind of what we're aiming at. So it's a long way to fall if that happens, but it's a little too far off to tell still. I mean, that's another 90 points to fall till we even know. So that's kind of where the market is for now. So we hedged into, I think you guys saw the trade rationale come through about a week ago. We hedged into this move here on this break. Where's my mouse? There it is. Okay. If you draw a line right across here, we saw that if you break through there, the likelihood is you're going to come down into this area here, and it was difficult to tell how far you were going to go because of there's a lot of fighting going back and forth in this area. So we figured we put on just a protective hedge just to ride through the uncertainty. And that brought us down to the 35% exposure that we're currently at, and that's again just to ride out whatever the summer may bring, whatever as we head into the end of the year, whatever volatility we'll see, it's going to help us ride that out. So we do have a hedge on. We're definitely protected in a lot of the other positions that are still holding out, and even if they don't, did I hear somebody have a question?
No, go ahead.
Oh, okay. Sorry, I heard somebody in the background. Okay. So yeah, we have the hedge on. We're protected. I'll run through the portfolio and the positions and kind of the health of what we're seeing. But we do have that hedge on, and it is going to protect us for any unforeseen uncertainty, volatility that's going to come up to bite us. So again, there's the long term. This is a weekly chart. So there's the 1400 I was telling you about, long term trend from 09 right there. Meet up with it at 1400. Okay, so we've got some. As you know, economic political factors are starting to mount. So we've got additional headwind, not to mention the way the charts look, but Syria, obviously, what action are we going to take? You're seeing volatility in commodities, especially oil. Oil is one of the opportunities we have been talking about, and we're still looking at it. The challenge with it right now is just that the last thing you want to do is buy into it and have a headline come and smack you in the face, and then the thing reverses 3% a day. So we're kind of waiting out some of the uncertainty with Syria and what the action is going to be on our part before we jump into it, but it is still one of our top opportunities right now. Fiscal cliff is back in focus. Their debt ceiling was in December, and now it looks like it pushed back into mid-October. So that's getting back on investors' radars. And then taper, obviously, when are they going to do it?